I am financial accountant and I am management accountant. I file your accounts. I prepare and maintain your accounts. I know revenue recognition, accruals, prepayment, budgeting, forecasting, financial statement analysis, KPIs, and much more. I know capital allowances, corporation tax, deferred tax, personal tax, R&D relief, marginal relief, and much more. Without me, your profits would leak away in unnecessary taxes. Without my business analysis and proper strategic planning, you wouldn't have been left with much profits to plan your taxes on. Hello and welcome everyone. This is Harsh Gwalani and I'm an ACCA affiliate with experience in UK accounting. So being on both sides of the coin, being a management accountant currently in my role and also previously an year-end accountant early in my career, I know like how both kind of role looks like and what are the set of things that you are going to do in both of these roles. So let me help you understand and decode both of these careers and which will help you to decide what could be a right fit for you. What is the career that you can choose based on your interest? So let's stop this fight. Okay, let's stop this fight between both of them because both of them are valued. Okay, but the way they get the work done is different. One is for decision making, another one is for compliance part. Okay, so let us walk through what both kind of role looks like. So firstly, let me talk about management accountant. So management accountant, this is the definition as per ACCA's website. So management accountants provide a wide range of essential financial analysis and planning services to organizations. They prepare, develop, analyze financial information so that leadership team have reliable figures on which to base their critical strategic decision. So you need to I would highlight this particular point, critical strategic decision. You are going to be with the board members taking critical decisions. You are the strategy maker. You help them in making strategy. You help them understand their numbers, right? On the basis of that, they are able to decide what to do next, either to acquire a new company, either either buying a new machinery makes sense. How is the cash flow currently going on with the business? So all of these things are critical for helping business owners take their financial decisions, informed financial decisions. Okay, so that means your input will really be driving the successful growth and prosperity of an organization. So on a day-to-day basis, what you are going to do. So as a management accountant, you are going to review APAR. So that is accounts payable, accounts receivable. You are going to review at the month end. What you will do is you need to analyze the debtors position, creditors position if they are on track, right? You are going to look at the cash flow side. You're going to see how the cash flow is going through in the company. Let's say I sold a good and I am going to receive it in 60 days, right? And the another company, right, our competitor gets that conversion, the same conversion into 30 days. So that means we are a bit inefficient. How we could improve on that? Okay, you analyze the PNL, analyze the PNL and the numbers behind it. You see the gross profit, net margin, EBITDA. You see the profit after tax. So profit after tax, you will understand and you can just estimate. Okay, profit after tax is something that you will get at the end, like when you submit your accounts to the year end and the financial accountants, right, where they do plan all their taxes. Okay, so these are the kind of things you are typically going to use different kinds of softwares. Okay, so with that, you will also be preparing work papers. So that work papers includes different sets of accounts. Okay, you are going to prepare it on a monthly basis. So let's say you are also going to do bank reconciliation. In the bank reconciliation part, you are going to post transactions. So currently taking this a role, being management accountant, you are also going to do bookkeeping. Like as of now, now I'm taking it as like that, right? because most of the big organization would have separate roles for AP, AR. So if you are doing AP, you are just going to post invoices, and you are just going to work on the procure to pay cycle completely. And with the AR part, what you are going to do is you are going to look at the whole cycle from getting the orders from the customers, and at the end delivering them and collecting money from them. So this two are separate set of roles, and then you have R2R, that is record to report, from recording to reporting. So recording each and every transaction, that's kind of bookkeeping that you are going to do, and at the end how you report it to the key stakeholders. In this, you are going to communicate with key stakeholders, CEO, CFOs, board members on a regular basis. Okay, you are going to show them the numbers, how your business has performed in this particular month. Okay, so things can be really hectic during the month end, because there are multiple set of deadlines that you are going to follow. You also need to with the compliance part, most of the compliance part we think that goes to the year-end accountant, but there are indirect taxes that you need to consider. So VAT is something that sometimes the management accountant does. Okay, so as a bookkeeper, you record the transactions with VAT, you review the VAT transactions, and you see if the proper VAT rates have been applied. Okay, so things needs to be reviewed. You will review the AP and AR ledger. You will see if there are any variances, if there is something fishy. Okay, and you are going to review each and every general ledger. Okay, each and every general ledger. With that, you are going to identify if there is any reclassification. So on a month-on-month, so reclassification can be done on a monthly basis, or you can also do at the year end. So let's say you do it on the month end every time, then you are going to get a proper view. So if someone has posted, so if you yourself have posted something, so as an accountant, or because at the end we are human, we are not an AI, because AI is also making mistakes. Just considering we are human, we are going to make mistakes. So you mistakenly posted invoice that was for electricity, let's say, to travel expenditure. So when you show the P&L to the business owners, you are going to show the wrong information. Okay. So what you are going to do at the month end is you want to identify the general ledgers that needs to be reclassified. So there would be certain line items in the general ledger that you need to highlight, and you need to reclass them from the wrong account to their correct account. Okay. So reclassification is one of the area. With the revenue recognition part, as a management accountant, you know when and where to record revenue. Okay. So if AR person has done any mistake, you need to identify that. Okay. And you are going to identify accruals and prepayments. Okay. So AP and AR invoices would be posted, but who will identify when the expenses or revenue going to be booked? Okay, so our business runs on an accrual basis, not on cash basis, right? So mostly businesses run on accrual basis. Okay, accrual basis is a key concept of accounts. So based on the accruals basis, you are going to look at prepayment. So if there is an expense, so if you got a bill that was for, let's say, 1 year, okay, so that is about 12 months, right? Okay, dumb thing, that's dumb thing that I said. 1 year equals to 12 months. Okay, yeah, so 12 months in 12 months of subscription, or let's say insurance policy that you brought in, and with the AP part, when they book, the whole expense would come up in the same month. So your profit, let's say, was £20,000, and your insurance expense, let's say, was for £5,000. So 20 minus 5,000, you will get 15,000. So that would be a great and huge variance from what you were doing in the last month. Okay. So with the prepayment, what you will do is you will allocate this 5,000 with 12 months. So 5,000 by 12 months would be allocated proportionately to each month. So that means you won't see any impact, a huge impact on a particular month. This is divided, and this is what it actually means, because insurance benefit, the benefit of insurance, the expense that you have incurred and the benefit you will get is not for 1 month, it is for whole 12 months. Okay, so I hope you understood the concept of prepayment. This is not a lecture on how the things work. We may take a separate session on if requested. Accruals, similarly, if an expense is incurred, uh, but okay, if an expense has been incurred but money has not been paid, you have to identify that you have deferred income and you have got money, but you are still yet to provide any services. You have accrued income as well. So multiple things that you need to take into consideration. You are going to prepare a MACPAC, that is management accounting work papers. In that you have separate set of ledgers, you have P&L variances where you will look at on a month-on-month basis what is the change that you have got. So the electricity bill was earlier £300. Now it got up to £500. So why there has been a jump? Either there has been increase in the number of properties, talking about property management business, and that is why we are seeing the increase in electricity. So even if we increase the electricity, are we seeing the same kind of growth? Are we seeing the same kind of growth in our revenue as well? Because if you have increased the expense, right, electricity has increased, is it due to the number of pets that have increased? So you need to analyze, or is it something that people are using much, the office staffs are using higher electricity? Okay, so that there can be multiple reasons that depends on the nature of business you are in. Okay, so you are going to analyze the variances, you are going to prepare budgets. So in budgets, what you do is you plan for a certain amount of revenue and expense or profit that you need to get in a particular month. So you prepare. So mostly it is done for a whole year. Then you divide it by 12, and you get a particular month of budget. And then you compare it with your budget, that what we planned and what has actually happened and why that is so, and what we can do to resolve that, and and show that discrepancies to the CEOs, CFOs, and let them know what was our analysis. Okay, so budget is one thing, and you have forecast. Management accountants plan for future. Unlike financial accountant, they see the past accountants, right? The past accounts that have been prepared, they just see that. So you do not, you can't go back and identify any potential live business areas where you could improve. Okay, so you are going to prepare forecast. So I think we have covered much of the things. You have VAT and all that. So management accounting is a broad thing. Okay, and it again provides you a great and deeper insight into one business. Okay, so if you are a management accountant, okay, you are going to work for a particular business. Let's say recruitment. Let's say property management. You have understood each and every area of that business. Okay, you understand each and every area of how the goods arrive. Uh, so let's say if you are a manufacturing business, how the goods arrive, how we sell those, and how we get money from the customers, how we chase them up. So each and everything for a particular business, you are going to be a master of that particular business, managing the finances. Now let's move on to the financial account. So a financial accountant, a statutory accountant, and here I'm considering that your statutory or financial accountant would be doing filing and taxation as well. Okay, normally there could be different set of roles. So somewhat you will do the one person, the statutory accountant, will do the filing of accounts at the company's house. If you talk about UK, and you are going to look at the regulatory requirements of your country. Okay, you have different set of GAAP, you have UK GAAP, you have IFRS. So you need to know the compliance part. What are the notes to accounts? Uh, what are the year-end adjustments that you need to make? Okay, so as a statutory accountant, I'm considering that the filing and the taxation would be done by the same person as of now for this video. Okay, so what it does is it is the person is highly qualified. He is a chartered accountant normally. So he ensures that the financial statements are in compliance with what the law state and what the regulatory framework says. Okay, So here the stakeholders are again companies house. You have to file your accounts with the company's house, your HMRC, your shareholders who look at. So for the shareholders, okay. So management accountant prepares accounts uh, for internal purposes. Okay, so they show their accounts on a monthly basis or any quarterly basis or something like that to internal stakeholders. Meanwhile, the financial accountant, the things that my financial accountant file is going to impact many people. It is going to impact a huge pool of stakeholders. The shareholders rely on the accounts that have been filed, unless it is audited. Okay, if it is an audited, then auditors are also required to have a deep set of review. Okay, they need to do the audit of the accounts because many stakeholders, your debtors, creditors, everyone is looking up to your accounts in order to identify they are going to continue supplying goods to your business, or they are going to continue purchasing from your business. So many set of things are required to be considered here. Okay, so talking about the day-to-day role. For a statutory accountant, you are mostly busy during the deadlines. Okay. So in UK, we have accounts filing deadline, so that we need to follow. Okay. So for a statutory accountant, what you will do is you are going to prepare the like each work paper. Okay, for individual company. So we'll have different set of companies. You are not going to work for individual company because this is something that you just do at the year and you are not going to do it whole year. It is kind of a 1 week or 2 week task just to finalize one set of accounts. Okay, you do not need to prepare. You just need to review those accounts. You need to identify. You need to reconcile each and every account. You will reconcile bank. You will reconcile credit card statements. So you are going to have documentation for each of the general ledger account which has been in the year end. Okay, you are going to see if there are still need to make. So if proper bookkeeping is done, you are not going to face much difficulty. But if the bookkeeping is not proper, there might be revenue which have been booked in the purchase ledger, and the there would be some reclassification errors that you need to identify. You are going to book accruals and prepayments as well at the year end. You are going to see VAT reconciliation. You are going to identify the details and compare it with the base source. Okay. Yeah. But here you are going to meet the business owner at the year end. Normally at the year end, after you file a, if there is any query, you are going to have an email to them. You are going to chat with them. But normally you do not have a call with them on a regular basis. You are just going to see them on just a second. My charging gone off. I just need to plug on my charger before it goes off. So yeah, sorry for that. Let us continue. So what I was saying is that as a statutory accountant, you, unlike management accountant, you are just going to see the business owner at the year end. Okay, they are uh, just they just want to file their accounts, okay, properly with full compliance. They need to identify the tax liability. They need to save tax as much as possible. Okay, you are going to see them normally at the year end. The business owners, remember, yeah, we do have accountants as well. Okay, so with the statutory accountant, you are going to have different sets of responsibilities here as well. Uh, you will have again variances or something that you will see on an year-on-year basis. Uh, One thing is that you can't identify any mistake at the source. Okay, you can't identify any mistake at the source. You know that something is done. You know something is done, but you can't change anything. Where management accountant, he can give you an idea of your business position at the current moment, and he is also able to plan what to do in future just to avoid that. But as a statutory accountant, you get the set of accounts which have already been prepared, and then you are going to review it and you are going to do necessary adjustments before filing. You are going to, as a tax accountant, okay, as a tax accountant, you are going to prepare corporation tax return. You have to file CT 600 within the deadline. uh, you need to identify how you can save each and every penny of your business owner, of the business owner, uh, as well as you can. Okay, so how you could save each and every penny of the business owner from the taxes. We'll see how you can claim R&D reliefs, how you can claim capital allowances, how what are the expenses that are allowed and disallowed, uh, how can a business owner efficiently use directors loan account. Okay, so there are many things that you need to take into consideration. One another thing is that you are not deep into any particular business. You understand the business, you identify what is the business that they do, what is the structure that they hold. But since you are not involved in the day-to-day operation of a business, you are not master of individual business. So you don't know, because you are filing different companies for different companies. So it would be you would be working with sometimes a healthcare company. You are going to work with sometimes a property business, sometimes recruitment business, sometimes manufacturing business. So this is not that you are going to do on a daily basis. Yeah. So you are going to appear just at the year end. You will see people. You will see the business owners coming up to you just to file their accounts and file their corporation tax. They also rely on you for any tax planning strategy and advices so that they can efficiently manage their business. Okay, so the compliance part is really important, because the you as you are as it is a public filing, many people are going to rely on your data. So you should be highly qualified, you should be highly experienced for that as well. Okay, so talking about the tools that have been used here, so both of them have to be tech savvy. Okay, Excel is something that is must have for both of them. Okay, because you are going to prepare work papers for in both of the roles. But the softwares that you use will depend. Mostly the bookkeeping software, Xero, QuickBooks, and Sage is going to be used by management accountant, and statutory accountants use softwares, the filing software such as Tax Kelsey. You have CCH, you have Alpha Tax for filing tax and calculating the corporation tax. Okay, so with the AI, with the AI incoming, you can both of the roles can take an advantage. So for a management accountant, you can identify uh, any task that on a day-to-day basis that is being done in the business, which could be automated. So any day-to-day task which could be automated, which could compound over time as you automate this, so that the business is more involved in the decision making, not in the daily task. Okay. So for a management accountant, AI can be of a great use. For a statutory accountant as well, they as you firstly want, before you start any sets of accounts, so what you do is you extract a TB from the previous year. You have opening TB, you have a closing TB. You also compare it with the previous year of accounts that have been filed. You prepare opening balance adjustments, and you have accruals, prepayment, you have debtors, AP, ER. Okay, so as a year-end accountant, there are still certain tasks that you still do manually. So like VAT reconciliation, bank reconciliation, which could be automated with the use of AI. With the compliance part, you can understand what a particular set of business does before even you start in. Because understanding a business will help you what kind of expenses or what kind of general ledgers or what kind of chart of accounts that business should be having. Okay, it is not always that so if you are in a property business, electricity is somewhat your major electricity, gas, and light. All of these things are your major part of expenses, right? But for, let's say, a recruitment business, it would be a part of overhead. It would be a part of overhead. It is an office expense. This is not something that you are going to generate revenue because of providing that service. This is something that you are using for office. But for a property business, this is something that is directly proportional to your revenue. Okay. So AI can be advantageous for both of them. Okay. I have a great thing to mention here. Okay. Before even you compare things, management accountant is like a doctor. It monitors your health regularly. It says that you should be eating apple twice a day. It helps the problems before even it is created. It recommends the changes and keeps you healthy. While a statutory accountant is like a lawyer, it ensures you are in compliance with the laws. You protect the company any from any misleading reporting. Okay, you protect it protects you when the regulations apply. It makes sure that accounts are filed correctly and appropriately. Okay, so both of them have uh, a different set of work that they do, and both of them bring value to the business in their own way. Okay, so it is not like someone is higher than someone else. So each of them hold a value to the business. Okay, one plans out the things at the base level. The person as a management accountant is able to save hard cash. Okay, they're able to generate revenue. You are able to reduce costs. So you are going to save hard cash. But as a tax accountant, as a financial accountant, as an year-end accountant, you are also important to have savings for the business. Okay, so you are also saving money in the pocket of the business owner. So both create value in different ways. So there is no point of comparison, but you need to identify what is best for your career. If you are an ACC student, if you are a CA, if you are a CA student or a practicing chartered accountant, you need to understand what both of the roles look like before even you jump into any of the roles. This will help you serve your client better even if you are doing business. So you get to understand what are your responsibility and scope that you need to maintain your service with. Okay, so I hope this clarifies a lot of doubts that were regarding both of the roles, management accountant and year-end accountant, that we have been seeing. So there is a no thing such as like a debate for this. Both are important. One is for decision making, a little bit of compliance, and one is for majorly compliance and tax savings. So both have a good value for a business. So you choose your career what on the basis of what interests you. Okay. So I think this is something that this is all that we have covered. I did not have any script out here or anything that I just wanted to read out. I just wanted to express things, what I've learned during my previous 2 years working in both of the roles. So you might see a bit of a bluff in this video, or it would take time for me to express the things. But I hope that I'm at least clear to you what the message I just wanted to like what was the message that I wanted to convey to you.